News stories of the day. My name is Nzinga and we begin as usual with your number of the day. Today that number is 6.25%. I know we've been speaking about it since that announcement came out earlier today by Reserve Bank Governor Lesetja Kganyago, saying that the Reserve Bank cut the repo rate by 25 basis points to 6.25%. The prime lending rate is 9.75%. The Reserve Bank has cut its economic growth expectations for 2019 from 0.5% to 0.4%. It now expects the economy, some would say very optimistically, to grow at 1.2% this year. That's down from 1.4% earlier. Remember, the World Bank has forecast that South Africa will grow at 0.9%. So the MPC assesses risks to growth to be on the downside. Let's give you a little bit of an explanation, because I saw earlier that people were saying online, what does this actually mean? So in order to counter inflation, there's a need to make sure that there isn't an unmanageable amount of available funds or money. The Reserve Bank outlines the repurchase rate, also known as the repo rate. In turn, commercial banks will use that number to determine what type of interest us as consumers pay. So that number of the day for today is 6.25%. It's definitely going to affect you. Let's go now to news from Telkom. Workers there face an uncertain future with around 3,000 jobs on the line. The telecommunications provider announced it would begin a process to cut its workforce. The company is struggling with declining performance in fixed voice and fixed data services.
Telkom, which runs South Africa's biggest fixed-line telecom network, has announced its plan to retrench some of its staff by April this year. The company says it has its back against the wall and needs to implement measures which will drastically reduce costs. And to secure its continued commercial viability, it's got to improve operational and financial performance.
I think you really touched on it earlier. It's really because of a very weak economic environment that we find ourselves where we are, but also we've been experiencing consistently decline in our fixed line voice business. We've also been seeing a lot of migration from the fixed data. Most people are now moving to mobile data, so making fixed data very difficult to operate. And obviously, internally, organizational operational inefficiencies that we need to fix. So those are some of the things that are getting us to this point. We will now go through a CCMA facilitated process, where we will then go through what are the options that we have. Could we come to a workable solution between the unions? And then this first phase, we would then see people likely leaving at the end of April.
Communications Workers Union says that they will meet with Telkom management on the 22nd of January. The union wants finer details on which departments will be affected. The possible retrenchments are not going down well with the trade union, and they're threatening action in court and in the streets.
Our reaction towards that as a trade union movement, we firstly put a blame squarely on the shoulders of management on their corporate plan that is so weak. And we've said this thing 2 years ago when we marched to Tuli House. Unfortunately, our grievances fell on deaf ears. And we've said that one amongst other things is that the industry is changing. And obviously, people are moving from voice into data. And that is a sign that the company has to adapt to that customer demand. But it's also an indication that privatization of SOEs does not yield results. But privatization of SOEs brings about the instability of the economy of a country in general. It weakens the capacity of the states. But furthermore, it enriches few at the expense of many people, because if you talk about 3,000 workers, you basically talk about the 3,000 families and extended families that rely on those individuals.
Telkom's announcement comes 2 days after retailer Massmet Holdings said it could cut up to 1,440 jobs and a plan to close some stores as it struggles to grow sales in a tough economy. Nothando Makutulela, SABC News, Johannesburg.
Let's go back to that top story about the repo rate cut. Mpho Molopyane, an economist from RMB, joins me in studio. Thanks so much for your time on SABC News. Was this cut expected?
No, it wasn't expected. It was a surprise cut. So most of the economists, including ourselves, surveyed by Bloomberg, we expected the SAB to keep interest rates unchanged, given the difficult period that we'll be entering into, the budget and the Moody's decision in March. So it did come as a bit of a surprise.
And many people are saying that it's too soon for the cut. Was this the right time?
Well, I mean, if you look at the inflation outcomes and the growth outlook, essentially, the SAB was justified cutting now. And also, I think it also speaks to a different tact that the SAB, is taking now. So previously, they were worried heavily about the fiscal risks, so the budget looking so negative and the Moody's downgrade that's been hanging over our head. But now it seems as if though they're taking a backseat and saying that when the risk materializes, and then they'll act accordingly. So then essentially they're going back to fundamentals, factors that are within their control, which is mainly inflation and growth. And given inflation outlook and the growth outlook, which has reduced significantly relative to the November meeting, they were justified to cut today.
Okay.
Yeah.
What's the practical effect of that rate cut of 25 basis points? If I'm watching at home, why should I care?
Well, I mean, if you have debt, if you have a bond, a car payment, this will mean that you're paying less in debt servicing costs. So it will provide consumers with a bit of reprieve. And we also know that there's the Eskom court application with NESA that are looking to increase electricity prices. So in terms of consumers, it will provide just a bit of relief.
Okay,
Yeah.
talk to us about how consumer inflation and the repo rate interact and work with each other.
Yeah, so the SAB essentially would look at real rates. So essentially real rates is the repo rate, which is currently at 6.5%, and you subtract that from inflation, which is consumer inflation, and then determine the neutral rate, the neutral real rate, which the SAB currently estimates at around 2.2 and 2.4%. So essentially with this cut and the other cut that they're projecting in November this year, it means that real rates will be around 1.4%. So then the SAB uses that to assess whether monetary policy is accommodative or restrictive to growth. And given real rates are expected to be at about 1.4, when the neutral rate of the economy is at 2.4, it means that monetary policy is accommodative. So the neutral rate essentially means that monetary policy is neither restrictive nor accommodative to growth.
Okay,
Yeah.
I see.
Yeah.
Let's go back to an issue that you raised of that possible downgrade. Markets seem to have priced it in. Many people are seeing it as almost a certainty that South Africa will be downgraded. What effect does this rate cut have on perhaps the chaos that's going to ensue if South Africa gets downgraded?
Yeah, so I mean, if South Africa gets downgraded in March, the Reserve Bank might have to reverse this cut. There's varying views around whether a downgrade is fully priced in or not. The biggest challenge there is that if the South Africa is downgraded, we're going to be excluded from the week B, and we're going to see a huge outflow of capital out of the economy. So that's going to affect the currency. It's going to affect bonds. We're going to see initial knee-jerk reaction, the currency spiking to levels that we've probably seen during the Nenegate. So essentially that means the SAB might have to hike interest rates, essentially reversing this cut that we saw today.
I'm glad you brought up the currency, because there's also been concerns about a possible weakening of the currency and the rand. Talk to us more about that.
Yeah, so I mean the rand, if we saw what happened during the December period, we saw some strengthening, and that was mainly at the back of the global environment, which has sort of been more accommodative and has created a risk-on environment. That was at the back of expectation of the US and China signing their trade deal. And that's why also today when the deal was signed, yesterday and particularly when the deal was signed, we didn't see any strengthening in EM currencies because that deal was already priced into the market, sort of to say. I think the weakness that's expected on the currency front is due to our growth outlook, which we're now expecting growth for 2020 to be below 1%. So in terms of return to investors, it's not really lucrative to invest given the growth profile and also given the budget, which is going to be likely negative. It might surprise the market, and also the downgrade. So that's at the back of why most market participants are expecting the rand to weaken because of all these risk factors.
Thanks so much for your time on SABC News this evening. Mpho Molopyane, she's an economist at Rand Merchant Bank, joining us in studio there to talk about that rate cut. So there's been widespread reaction to the appointment of Professor Malekapuru Makgoba, who will replace Jabu Mabuza as Eskom chairperson. Makgoba is the former vice-chancellor of the University of KwaZulu and the country's first health ombudsman. He's been a member of the Eskom board for the last 2 years.
Professor William Makgoba is a well-known scientist and academic. Unlike Jabu Mabuza, he is not a business or corporate leader. He is also not an energy expert. And there lies the problem, according to Professor Nick Pinedel, the founder of the leading business school in Africa, Gibbs.
We need operational experts. The board itself now, as it's does not have many experts, global or South African, who really understand the massive complexity of running a big power station business. And I was looking at the numbers for Kusile and Medupi. It's astonishing amounts of numbers. Hundreds of billions of rands of our money has been misspent, and they are not productive and they're not working. And we haven't done the maintenance. These are massive management questions.
Government says Makgoba has been appointed on an interim basis pending the appointment of a new board with the right kind of electricity and corporate expertise as directed by the president last week. The issue is said to be discussed at the ANC-NEC meeting this weekend. But Professor Pinedel cautions against the ruling party trying to micromanage Eskom.
Once you have state-owned enterprises that are meant to serve the public, and you have a ministerial shareholder, in this case Minister Gordhan, the question of how governance then works between the political party who's been elected, the state and government, and then the board is a very complex set of issues. Clearly we've had some micromanagement in the past, and let me say also clearly we have a major set of challenges in governance of SOEs. Today we read about NERSA, PRASA. This is a very major problem for the country because these are huge institutions that are monopolies that are meant to serve our economic development. So how they get managed in governance is critical, and the board should be the primary driver of this.
There is no denying that poor leadership and corruption in the last decade has brought Eskom to the brink of collapse. And for that, South Africans are paying a heavy price, literally.
We had the lowest electricity cost in the world, because of our coal resources. So then we had to spend all this money on capital projects, which meant the tariffs then had to go up very, very dramatically. So you add the whatever was looted out of Eskom, which I can't speak about in detail, I just don't know, but what we read and what we see, it's very significant. And then poor management. Then you grow the organization by 30-40% in terms of people working there, and you're producing half the electricity, and you're having to increase the cost of electricity. This is a terrible mix. This is a perfect storm of three things that should never happen. Where it's misgoverned, you have to spend massive capital, which you have to borrow, which puts the country at risk. You have far too many people, which of course the unions will resist right-sizing. And then you have to put up the cost for the ordinary citizen in this way. This is all a mess. This should never happen in a country as sophisticated as South Africa. And if good governance had been applied, this would never have happened.
No one knows what the future holds for Eskom. What is clear is there are no quick fix solutions to the problems that it and the country is now facing. Mbongeni Mucho, SABC News, Johannesburg.
Thanks for joining us on The Bottom Line. Simon's coming up next with your sports, and Sepiso and Aldrin will be back with more news for you. Before we go, let's take a look at the markets. The rand trading at 14.42 to the dollar at 5 according to the JSE, at 16.08 to the euro, a Barrel of Brent crude oil is trading at $65.28. Let's take a look at the rest of the indicators.
Right, time for some sports news.